According to the trading chart, both the euro and the British pound extended losses against the US dollar. Lower demand for risky assets can be attributed to strong macroeconomic indicators in the United States. This makes it clear that the US Federal Reserve will keep raising interest rates to beat inflation. Yesterday's data on US producer prices showed that the pace of price increases slowed, but not enough. Against this background, the euro and the pound lost ground. Notably, the latter briefly rallied against the dollar after the Bank of England decision before falling back as the dollar strengthened after US data. On Thursday, the British Central Bank lifted its key interest rate by a quarter of a percentage point to 4.5%, noting that the regulator would stay the course as it seeks to curb stubbornly high inflation. Given that inflation remains above 10%, the Bank of England is expected to deliver more increases. Nevertheless, this news failed to support the pound, which resumed its decline. As for today's news releases, the macroeconomic calendar includes data on UK GDP. Britain's economy is estimated to have grown by 0.1% quarter-on-quarter in the first 3 months of 2023 and 0.2% year-on-year. On a monthly basis, economists mostly expect growth to hold steady at 0.1% in March. In addition, Britain is set to report statistics on industrial and manufacturing production. If the indicators increase, the pound sterling will have a chance of recovering. Traders may also take notice of speeches by European Central Bank and Bank of England officials. The focus of market participants will be on the University of Michigan's Consumer Sentiment Index, which is foreseen at 63.0 in May. If the figure exceeds analysts' forecasts, the euro and the British pound will come under stronger pressure amid a continued rally in the greenback. And now let's move on to technical analysis. According to the 1-hour chart, the euro-dollar pair traded downwards throughout the week. So there is a high likelihood of a false breakout at the nearest support level of 1.0911, which will allow the euro to enter a bullish correction to the area of 1.0944, 1.0948. Its false breakout will create a sell signal. If bears fail to regain control of the markets, the euro will see a stronger correction to 1.0971. At this level, I recommend going short on a rebound. Long positions on a rebound will be relevant at 1.0878. However, in the most likely scenario, bulls will take the lead today with bears locking in profits. Speaking of the British pound, traders are awaiting data on the UK's economy. Statistics are forecast to be quite upbeat. Yesterday, the Bank of England expressed optimism about further economic growth rates. These expectations could back up the pound sterling right now. Thus, the British currency has every chance of clawing back yesterday's losses. If the price consolidates above 1.2531, driven by GDP data, and tests it from the top down, a buy signal will be generated. In this case, the pound will advance to 1.2567 and probably 1.2602. At the level of 1.2602, traders are recommended to go short on a rebound. Short positions at 1.2567 and 1.2531 can be considered only in the event of a false breakout. Thus, bears will strive to drag the price down to 1.2495, a new one-week low. A false breakout at this mark will make it possible to go long. In addition, traders may buy the pair on a rebound at 1.2465, counting on an intraday correction of 25-30 pips. Good luck and have a nice weekend.